Alright, hello and welcome back everybody to episode 98 now of the podcast. For anybody who's new, this is a podcast, so obviously as that implies, this is audio content. Whatever's on the screen is just a filler image, it means nothing. As always, if anybody wants to support me, PayPal and Patreon links are both down in the description below and in the top pinned comment. So, quite a number of metal prices are rising, and quite a number of them are rising rather quickly. The headliner or the primary subject here being iron. Iron has actually gone rocketing up in price for once. For the last several months, it had been kind of fluctuating, going up through the 120s and back down towards 100, up into the 120s again and back down again. Now, however, it has just been lunging straight upwards, and as of the moment has made it all the way up to $156.50 per ton. And for comparison, its record high all-time price was about $195 per ton about a decade ago or so. So the driver or the reasoning behind the upward price march of iron these past few months, with the primary upward push being the last several weeks, is renewed steel production and continued growth of, or rather resumed growth of steel production in the big chunk being China, but also a huge number of developing nations as well throwing in their part, as while the whole 2020 medical situation did slow down a lot of stuff and put a lot of things on pause or on hold. Inevitably, the developing world, and for China, that's still about half their population. On rough estimate, they've brought about half of their population up into first or second world living standards. So that still leaves another like 700 million people to lift up, which means another 700 million people's worth of, modern things and modern infrastructure that needs to be built. Plus add all of the billions of other people around the world that still want to, rise in living standards as well. They weren't really going to just, put off their increasing living standards indefinitely for the sake of antiviral measures. So steel production has been going back up and has resumed growing where it had obviously sort of been paused and dropped down a little because of what's been going on this year. But outside of Western countries, it has resumed marching upwards. And so obviously, no matter what the type of alloy, the primary core ingredient of steel is iron. Iron is the bulk material, and then on top of that, there is always manganese and carbon. And then beyond that, what you add after that varies depending on what type of alloy you're going to make, whether you add molybdenum or nickel or cobalt or chromium or whatever else. But the primary tripart foundation is always there: iron, manganese, and carbon. And so expectably, manganese prices have obviously been jumping upwards as well. Earlier in the year, at their low, manganese prices had dropped all the way down to only about $1,450 per ton. Then as things in production and manufacturing resumed over the course of the year, it gradually crept back up to a bit over $1,600 per ton. However, in the last few weeks, it has gone jumping back up much more quickly, and as of the last check, has made it up to $1,845 per ton. And some other minor metal price updates before we get into the primaries. Cobalt has returned to a more even level price at a flat $32,000 per ton. Tellurium, one of the key ingredients for higher efficiency solar panels, the ones that have sunlight to electricity yields of like over 30%. So obviously demand for tellurium has been growing, recently pushing from the low 60s up to over $70 per kilogram, inching a bit higher over the last week or two from $70.26 up to $70.65 per kilogram. Lithium, who had been up towards $20,000 per ton as the EV boom was going, until huge additional mining production, particularly in South America in those high lithium salt flats in the Andes, finally started up a few years back. That massive surge of production, along with a potentially temporary flattening of EV production, dropped lithium prices down into the 6,000s per ton. However, over the last few months, it's been gradually ticking back upwards, up through the 6,000s and now up to $7,141 per ton. Magnesium prices have been climbing really fast recently as well, being used in a number of chemical applications, as well as various steel alloys, aluminum alloys, and others. Magnesium has climbed back up over $2,000 per ton and is now up to just under $2,360 per ton. And specifically for the iron, there's actually a bit of a narrow supply issue, as China itself has shut down and put on hold a number of its larger iron mines domestically as a counterbalance to reduce carbon emissions, in place of placing winter heating coal restrictions on its residents. So that caused a recent supply dip, as well as because of the whole situation this year. Obviously, everything has been sort of reduced to various amounts over various lengths of time during the year. And the big major iron miner of the world is Australia. And Australia has been a very hard virus clampdown type nation. And so now we have iron climbing potentially to meet or exceed its record. For precious metals, gold inventories are still fluctuating in the same range they've been at for several months now. Currently at a bit under 37.6 million ounces in storage after starting out the year at only around 8, having gone up fast initially as once the 2020 situation hit economically, demand for jewelry collapsed by about half globally. And unlike the others, jewelry is still a huge source of gold's demand, so that cut into total gold demand. However, it didn't rise forever. It started stalling around 37 several months back, as the ongoing economic instability and uncertainty from this whole thing has been dragged on and on. Investors started buying up gold like they always do, so increased investor demand became just enough to start leveling that off. And gold prices presently are at $1,843 per ounce after breaking their record earlier this year, getting up to, if I remember correctly, about $2,070. Silver inventories have increased by about 30% this year, as opposed to gold's 350%. So the collapse of jewelry demand did damage overall silver demand, but not by anywhere near as much as gold demand. Silver inventories around the start of the year were down towards 300 million ounces in storage, and as of now have climbed over the course of the year up to 394. As jewelry is still a decent enough part of silver demand, but is not a huge chunk like it is for gold. Silver's huge chunk comes from all the various industrial sources like electronics, soldering alloys, chemical catalysts, solar panel production, and soon upcoming as a new ingredient in higher efficiency EV batteries. So just as everybody was getting happy because they're finally going to take the troubled metal cobalt out of EV batteries, now there's just a different problem arising because they're going to start putting silver into the batteries. And silver prices are presently at $24.08 per ounce. The platinum group metals were climbing in inventories over the course of this year because of reduced vehicle production, as new vehicle sales dropped by 15% or more for the better part of this year. And the primary source of consumption for platinum group metals is in the manufacturing of catalytic converters for ground vehicles. And platinum group metals were getting really low before this year, as their production from platinum group metal mines around the world, aka basically just South Africa, we have a whole video about that problem. You can watch that, link in the comments below. But their production from mines has been flat for the last decade, while demand has obviously kept going in the only real direction human civilization's demand for any resource ever goes, up. So global platinum inventories were down to only about 152,000 ounces in storage, and over the course of the year they built back up to about 650 or so. However, over the last couple months they've gradually been dropping back down again as vehicle production has picked back up, and as of the moment are down to 623,000 ounces in storage. And platinum prices have been climbing recently as well. They had been hanging back down in the 800s, however now they're back over 1,000, presently at $1,017 per ounce. Palladium inventories had been much lower. they had been all the way down to only 29,000 ounces in storage. And they made it up to about 138,000 ounces in storage and have likely dropped some bit below that. However, palladium inventories don't update daily and weekly like platinum inventories do. They typically just release sudden updates every few weeks or so. And palladium prices are presently still hanging around in the 2300s at $2,316 per ounce. And rhodium, the most valued and rarer of the three primary platinum group metals, has broken its price record repeatedly this year. Up into the 14,000s, fell back down, broke it again, higher up into the 14,000s, fell back down, up into the 15,000s, fell back down, and now has broken it again, up over 16,000 and still going up at $16,300 per ounce. Alright, now for the base metals. Aluminum inventories jumped up by a decent amount this year, primarily running off of the reduction in vehicle production. At the start of the year, they were down around 1 million tons in storage, and over the course of the year, during the shutdown part of the year at least, they got all the way up to 1.7 million tons in storage. And since then, since the end of summer, they have been dropping back down as everything picks back up, and they are now down to 1.33 million tons in storage. With aluminum prices now finally, after a while, going back up over 2,000 at $2,031 per ton. Nickel inventories have held in relatively the same range for most of the year, as the reduction in nickel demand across industries globally was just enough to sort of even out or balance out Indonesia cutting off all of their nickel exports. So those two kind of evened out and kept nickel fluctuating around in the upper 230s. And recently they've climbed up a little bit. However, now they've started dropping back down again. They had gotten up to 244,000 tons in storage. However, now they're back down to 243. While nickel prices have been climbing, they're back up over 15,000 and went up over 16 again and over 17, now at $17,300 per ton. Lead inventories obviously built up over the course of this year, the primary source of that being reduced demand from lead-acid batteries for ground vehicles, from the reduced vehicle production numbers, as lead-acid batteries are the overwhelming majority of lead consumption. So lead inventories were down in the 60s. However, they surged up to around 130,000 tons in storage, and since then, over the past few months, they've gradually been dropping back down, now to 110,000 tons in storage, and lead prices are back up over 2,000 as well, hanging out at about $2,058 per ton. Zinc inventories also jumped up at the start of the year and got up to the 220s, and since have gradually been dropping back down until just recently, as steel production has picked back up quickly in the developing world, and part of that obviously for a lot of infrastructure being galvanized steel. So that's also propped up zinc consumption again, and so zinc inventories have begun steeply dropping now. It had taken them a month or two to drop from the upper 220s down to about 220 or 221, and now over just the last week or two, they've dropped down to 216, while zinc prices have been jumping up, and they have gone all the way up into the upper 2000s, now at $2,786 per ton. Not their all-time highs. Their all-time highs were up in the 4,000s at one point. And the less abundant base metal tin. Tin inventories are typically much lower because it's less abundant. Usually they're anywhere between 5 and 15,000 tons in storage. And at the start of the year, they were actually under 5. And over the course of the year, they built back up as well, up to around 11,000. However, over the last few months, they've been getting drawn back down to 5,345 tons in storage, while their prices have correspondingly been climbing up in response to that, up past the 15-16 area they were hanging out at, through 17, 18, 19, now up to $19,500 per ton. And to finish everything off, we have the monthly mining updates. So for copper, for the first 8 months of the year, January through August, comparing the years, last year, 2019, in the first 8 months of the year, 13.47 million tons of copper were mined worldwide, whereas this year, over the same first 8 months time period, only 13.36 million tons were mined, a little bit less. So like I've been saying for most of the year, it's looking like copper is going to have a flat year or so in terms of its production. In terms of global copper inventories, they had climbed up as well in response to a lot of stuff shutting down and stopping, and they'd also gone up to about 1.7 million tons in storage. However, they've been on their way back down now as well for several months, and they've just sort of leveled out. Last time they were down to 1.26. Now they've only dropped a little bit further down to 1.25 million tons in storage, while copper prices have been jumping up recently and are way back up over $3, now up into the upper threes at $3.53 per pound. In terms of lead production, for the first 9 months of the year last year, global lead production was 3.46 million tons mined, while the first 9 months of the year this year was only 3.26, and that's continuing the normal trend, as global lead production did definitively peak back in 2013 and has been declining since then. Global zinc production for the first 9 months of the year last year, 9.56 million tons of zinc were mined globally, while in the first 9 months of this year, only 8.89 million tons were mined. So zinc is having a sudden drop year. Granted, I think this is just a 2020 anomaly, as I would not be expecting zinc production to be peaking just yet. And aluminum mining for the first 10 months of the year in 2019, just under 109.9 million tons of aluminum were mined. Versus this year, aluminum is the only one that's been growing. Global aluminum production this year was a bit higher at 110.5 million tons being mined. Alright, that's it for this one. Thank you everybody for sticking around and listening. Like if you enjoyed, subscribe if you haven't already. You can support through PayPal or Patreon. Both links are down in the description below and in the top end comments. Only do so if you actually can, obviously. May God bless and protect you all, and I will see you all around next time.